Hello, hello, everybody. Happy Friday, August 30th. 1:04 p.m. It's hot outside here in Las Vegas. Welcome, welcome. Today we're going to be talking about something that I think might be the most important thing that you could possibly know when entering or exiting the real estate market. And this applies to any commodities market, but this particular presentation is going to be specifically geared to the Las Vegas real estate market, okay? So if anybody's in another market and you'd like me to analyze your market according to this for you, I'd be happy to do that too. For today, though, this is going to be focused on the real estate market here in Las Vegas. So to start out, I've shared this graphic with you, and this is called the Cycle Theory Real Estate Forecasting Tool. This tool is used to do what I consider to be the most important thing when entering or exiting a real estate market. That means by buying or selling. And that is to be able to identify the tops and the bottoms of the markets. And most importantly, to know where we are in that cycle. So I'm going to start out down here in the lower left-hand corner. And this is a long-term view of a general market cycle. Now, this is a bull market that we are in. We're a bull market for real estate prices, generally speaking, across the country. We are in the hottest market in the United States, Las Vegas. Recent reports have shown in the last 4 to 5 days that we have now surpassed Seattle in the hottest real estate market. Please remember, this is something that we have been telling you now for months. So down here is a general idea of what is happening overall, just a visual depiction of what's happening. We're going up pretty steep. These peaks right here are pretty steep peaks. If you were to draw, you might have to have this graphed. I'll graph the next one for you guys. Real heavy peaks here, real heavy troughs. But if you notice the bottom right here, and the bottom here, this is called the floor. The floor keeps rising. This is called the ceiling. Ceilings also keep rising. Okay? See this upward slope here. Now, what I've done here, this yellow represents what I consider to be the most important part of real estate. That is knowing where you are in the market right now. So to do this, you have to break down the way that people are making real estate transactions happen in real time. Meaning, you have to know the following information about the purchases that are going on currently in the market. Now, please do not confuse this with current ownership. What we're looking at is a snapshot of what the market transactions are representing. Now, when you're a client of ours at the REIG, and you're working with one of our agents, you get this kind of information fed to you. It's always available, and all you have to do is ask. Agents, you too, if you want to be associated with us, you want to start really getting into real estate in a way that's meaningful to your clients and allowing them to do the best that they could possibly do with for what is most people's largest investment. This is the kind of stuff that makes a difference. All right, so let's get back into it. Here's where we are right now. We've come from here. We've gone down this slide. And now here's where we're going. Okay. Here's where we are right now in this curve. How do we know it? Well, it's pretty, when you break it down, it's pretty easy to see. So we've got long-term investors and flip investors, and that includes long-term investors include the buy and hold market. And flip investors represent the rehabbers and the wholesalers. When you have a market where the current transaction ratio is 90% to 10%, owner-occupied is representing 10% of the transactions in the market. This is what happens when credit is tight. This is what happens when the Fed stops expanding interest rates. When they stop buying bonds. These are the kinds of things that create market floors. Okay, it's detailed. How do you know it? By who's doing the transactions. The long-term investors normally represent cash buyers. The flip investors almost always represent flip buyers as well. I mean, cash buyers as well. But they also are the only part of real estate commodities that deals with what I would consider to be speculation. There's very little speculation in this market, but if I got anything, I think it would be that there are the speculation in the market are the hard money lenders and those institutions that are doing similar creative investment type stuff. And right now I'm seeing a ton of it in the market too. And we've seen it for a while. So that's how I know we're not down here. But the percentage of those transactions is really the key, and that's to make it simple. I mean, I'm dramatizing it to make it interesting, but honestly, just to make it simple and dumb it down, when you start seeing that the majority of the properties are being bought by long-term investors and flippers, and that owner-occupied only represents really about 10% of the transactions, you know that you're at a floor. You get a step up here now. And you start seeing a difference in owner-occupieds, and the reason that you're seeing a difference in owner-occupieds is banks are starting to lend. Okay, this has started happening now. This is about 12 months ago. When we did our forecast, by the way, we did our forecast here. This was our 2018 forecast, and then up here was our 2017 forecast. Over here, I'm sorry, was our 2017 forecast. So you start seeing that money becomes available. It's a little bit easier to lend. Banks are loosening their regulations. I mean, right about here, we started seeing alternative, like private investment groups like Caliber was doing no-doc loans. I mean, they almost never quit. They just figured out how to do them under the new laws and started. They were the first ones in the market. That's probably why they were buying up all the inventory, all this shadow inventory that everybody thinks is coming back onto the market, but it's not. It's not coming back onto the market because if you look at the rent rates and the rent figures, and they're going up 10% a year over year. You know, properties that were 90 cents last year are like going for $1.12 a square foot this year. They don't realize that Caliber's turned it into a rental market. And then others have followed. We've gotten other investments coming in. So you start seeing that. So now you're getting these properties that were bought real low now flipping into the owner-occupied market. And you're seeing more and more people pick up these great remodel properties that the flippers bought like crazy down here. And loans are starting to go up, and they continue to rise interest rates. Everybody's like, oh, interest rates rising that's bad. No, it's not. It's great. It's committed money to our market. And you start seeing that these flip investors, now here's where the long-term investors come in. The long-term investors bought here. The flip investors sold here. The long-term investors are selling from here on up until we get to the part where we have a fairly high concentration of owner-occupied properties. And then we slip into this. We're going to go into a little dip, probably about 2020. 2020, the end of 2020, we'll start matching. We'll probably have a level year. It'll dip in the middle. That might last 14 months. It depends on what the Fed does. But we're right about here, okay? 2020, and then we'll put out another one right about here that'll kind of come in and take us from here because this is about where we're exiting on this forecast right now. Anybody that's looking to sell, you want to wait this out. Unless you have, immediacy, a need to sell, or you just feel like taking the profit because you got a strong equity position. Other than that, if you don't have anything real pressing, definitely don't sell. If you have to sell or want to sell, and you have the patience to be able to hold out for the market to reach it, which is not going to happen. It's not going to take too long for it to happen because the market's already rising. We've got a 50% increase in inventory in 3 months. People don't think that's a big deal. It's a huge deal. It's totally changing the metrics. As we were last time we talked in our last update for our members, we were talking about of a position that was a semi-strong position. Now we're in a very strong position. So we're about right here, right now. Investors still in the market right here, but accepting less profit margins. Okay, over here, they were making profit margins in this vicinity. When they were buying it down here, they're making sometimes 100% profit. Sometimes up here, it's 40, 50, it's 30. Now it's starting to get down. It's starting to get to like the 18% gross. So the investors have little interest now in the properties in this market, which is great. It's great for our market because once you have a fully stocked bar, all you can do is sell beers. Meaning once you have an owner-occupied market, which is a fully committed, cash-committed market, and these numbers right here may be off a little bit. Maybe we're more at like 92%, but to make the point, what drives a market's prices up is ownership. Actual owner-occupied. It means a lot. It means that our economy is strong because people are not only working here, but they're living here. If you can live here, that means you're working here, for the most part. So it's a strong indicator for our economy, which is being missed by a lot of people. We've got massive infrastructure, being put in by our tax dollars. Our government invests in our city. It's amazing. We have amazing outside investment, but the caliber here that bought up all that property. Now, what am I referring to? Those of you that have only recently started watching and following us or are becoming members don't know what that means. So I will recount one of my earlier videos, but you're welcome to go back and watch it. So what that means is that we're seeing this shadow inventory that was purchased from WAMU and from JP Morgan and these banks that had all of this non-performing assets on them that killed them as entities, even though they were owned by the same basic groups, killed them as entities. And then their non-performing portfolio went to auction. And Caliber went and bought it up. Most of it their own cash. Very strong cash company. They attracted other investors too now. So we're starting to see other things that are not just other groups coming in that are asking us to find large amounts of property for 100 doors at a time. You start talking doors, you start changing the language. These people have made huge capital appreciation, so they're happy to cash out. And guess what? They're going to go to another market. That's one thing I've learned about being a real estate investor. It's almost like a clique. I mean, there's a group of very wealthy cash investors, and the more they get together, the more buying power you have, the more you go in and you market make. That's what they're doing. They're creating their own market. They're doing what's called market making. And in the sorry, my throat was dry. In the commodities business and in the equities and financial markets business, and as is true as in the real estate business, the longer you have this, cash in and cash out, and you're buying, you monopolize neighborhoods. You can raise a neighborhood like, I'm calling Vegas a neighborhood, but honestly, it's a landlocked city. It has boundaries by mountains, and as soon as those boundaries get built out, property here is going to start shooting up, and that's going to be probably up here. Because you have all of this stuff coming in, you got the Raiders coming in, you got all the hospitals going up. If you haven't read my special report that came out third quarter of last year, it's still in effect. It's still relevant. You need to be reading that or watching the video on that, and that'll explain all of the infrastructure stuff. We're getting light rail. I'm so excited. I don't even want this to be about that. Go watch the other video. I'll stick to the cycle theory here. But knowing where you're at, whether you're listing the property and you are wanting to get a price because you don't have to necessarily sell right away. So you can ride it out a couple months. I think that this is going to last this period to this period right here to right here. It's going to last about, I think where we are right now as of today, end of August, we're looking at going solidly through that 2020 mark. I think 2021, 22, 23. I mean, I think you could see a big jump here because I think one of these years right here, we're going to get a Super Bowl. And the attention alone at that time, I mean, we're going to have, all eyes are going to be on us. Not only are we getting killed because of all of the, the gambling that's going legal across the country, Vegas is reinventing itself again, and now we got sports. What else could you possibly ask for here in Las Vegas except professional sports, which this town has deserved for a long time? I mean, I'm not really basing it all on that, and if you read my special report, you'll see why what I'm saying there is really just an icing on a really big cake. But the Super Bowl is a big deal because the whole world will be watching Las Vegas, and that means that all these cash buyers that are here right now in the market from Asia, from the Middle East, there's a lot of cash, lots and lots and lots of Asian and Middle East cash in our market right now, just buying right alongside these big groups. And guess what? 50% increase in inventory brought us to 7,500 roughly. It was 7,563 that Jake said. Properties on the market, which represents a 100% increase in 3 months, 50% growth. I mean, 50% net in 3 months. And if you take a look at the cash that is coming in from Asia and from the Middle East alone, and then add in the rest of these buying groups that are coming in and buying and building, we still have a very thin market of inventory that's actually available. So we're going to become a great rental market. It's going to be a great investor market. These prices can really, really, really go up. We're in a great position right here. It's a great time to buy. It's a great time to sell. I mean, if you want to be selling, it's a great time to sell. If you have patience and you don't have something, impeding, like, you're going into foreclosure, although we do handle that too with Joel and our We Help Defaults division. We do help defaults, but regardless of that, it's not a sales pitch. This is just about knowing what your options are in the market, understanding what the spread is here. And when we talk spread and prices, you'll see the blue value range represents the top and the bottom of any particular time. See, inside of this, you got the little buys and sells, and they got their own little dips and whips like this as well. And that's how you watch and see who's doing the market making, so you know what the neighborhood prices are doing, kind of see who's making that market, and what it consists of, cash deals. And that's what we do. We monitor this stuff. We take a look. We see how many deals are going through cash. We see how many deals are closing quickly. We see how many are being funded. We see all this stuff. We follow this data. It matters to us at the REIG. Thanks for sharing your time with us today. We appreciate it, and I hope that you, if you're an agent and you want to have this kind of consultation, you can become a part of our team in any state. We are real estate consultants. We help businesses grow. We help agents grow their business. And if you, as a client, are not working with an REIG certified agent, or if you don't see this powered by REIG symbol that you see in the lower right-hand corner, along with the nationwide, if you don't at least see this powered by REIG, you might want to find one of us. And if you'd like a list in your area, or to see if there's any agents that are working in your area, wherever you are, feel free to contact me. My contact information is always available in the commentary below, and if for some reason it doesn't show up there, it's Gio, at reiglv.com, or you can text me at 702-805-2720. That's it for now. Thanks again for spending your time. I hope this was helpful, and anybody that's in the market right now, if you don't have anything impeding or any reason to sell quickly, list your property and hold on to it. And do a little bit of a price push here, because I think we can get them. I'm seeing some strong peaks here, going up and up and up. So have a great day, everyone.